What's up, everybody? Welcome to the Stocks channel. Today the stock market was very volatile as the bears had the early lead and the bulls had to fight back near the end of the day. So today we're going to go over both the bear and the bull scenarios and see which one is more likely. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today's SPY was down 0.56% and we started the day out with gapping below the 20 daily moving average, which was a risk off indicator below 473 that we could be coming back down towards this very critical support zone down here at 467. And as you can see, we did not fill the gap, which is still going to be a possibility to push a bit higher to fill that gap. But now that we are starting to see a weakening bull trend, there is a very valid bear scenario that a lot of bears are probably already paying attention to. So first, we'll talk about the bear scenario, and the bear scenario is this double top look from SPY 477 where price action went up to 477, pulled back to 467, and then came back up to 477. And on the second attempt to break through 477, we are seeing another rejection, which is called a double top rejection only if we get validation from the price action, which means we need to break this neckline at 467. So the bear scenario will be the breakdown below 467, and that means we'll likely be coming back down to the price target right around SPY 458. So the bear scenario is very simple to understand. It means you're either shorting the market while we're below this rejection at 477, or you're waiting to short the market until we break down below 467 with the price target down here right around 458. So the bear scenario is a very simple double top rejection from the previous high, which was right there at 477 that we had back in December and then just recently in the middle of January. If that double top rejection plays out, we'll break down below the critical support and then we will continue lower towards the price target. Now the bullish scenario, which we've already talked about many times because we do have the bull trend, is that this is going to simply be a higher low as we start pushing higher towards the brand new all-time high price target above SPY 480. And I did tell you this was the highest probability chance, but keep in mind nothing is 100%. So even though this is likely the highest probability chance, it doesn't mean it has to play out and be correct right now. Now, I still do think this is the highest probability chance because as I just told you on the bear scenario, we need to break the neckline at 467 to validate that this is a double top. So as we're going lower towards that neckline, if price action does not break down below the neckline, that could be a bear trap as bears are calling a double top rejection without any confirmation. And then we could still get a higher low above 467 and then start to push for that next leg higher. So right now we have two very valid scenarios, which means the bulls and the bears are going to battle it out. And as a trader, it's your job to make sure you're caught on the right side of the next move in this market. And the next move in this market is going to be broadcasted from the price action. So right now, to get a lot more bullish, if we break back over 473 and start closing back over the rising 20 daily moving average, that is going to be a buy signal that we're likely going to push higher to the brand new all-time high. If you want to stay risk off below the 20 daily moving average, that's completely fine. And that actually is what I suggested last night, that below 473, you should be expecting a push lower towards 467. Then if the bears break 467, we're looking at the confirmed double top, and that's going to bring us down to the next price target. But until that happens, do not rule out this bull scenario because as I always tell you, you're better off to be prepared for both of the scenarios and then let the price action tell you which one is playing out. So for now, I'm going to give the benefit to the bulls because they still have this bull trend as long as we're above 467, and then below 467, then I'm going to start saying that the bears have the advantage in this market and we're likely going lower to the low 460s and the high 450s. So critical risk levels is the critical support at 467 and the 20 daily moving average barely above 473, and that is going to tell us where we're likely going from here. On the NASDAQ 100 triple Qs, we were down 0.56% today, and just like SPY, we had that gap down open, and the gap did fill intraday, and intraday we did test this critical support at 404. Now looking at SPY, you can automatically see that SPY looks a lot weaker because the triple Qs are still above all of the moving averages except for the 5 EMA, so there is still a lot of relative strength in the big tech sector, which is really no surprise with how strong stocks like Nvidia have been. Now in the triple Qs, I think it's very simple. Above 404, we're likely pushing higher towards 414 and 420. And if we break below 404, then we're coming down towards this critical support right around 396. Just like SPY, there's a very simple bear scenario, and the bear scenario is a very similar double top rejection break that would likely bring us down into the 390s and 380s if we start breaking down below this neckline at 396. So 396 is your critical support, but more importantly, we're still above 404, and I would not be shorting above 404 because of the bull scenario that's likely going to push us to new all-time highs. Now the triple Qs are very likely still going towards all-time highs because we already see stocks like Microsoft and Nvidia pushing to all-time highs, and go ahead and throw Meta in that hat as well. And these are top 10 names in the triple Qs, so if they're pushing to all-time highs, it wouldn't be unheard of that the index is going to push to all-time highs as well. But obviously, if we break down below 404, manage your risk accordingly, and below 404, we're looking for a test of that critical support at 396. On the Dow Jones, we were down 0.25%, and the Dow Jones did continue that bearish look from yesterday, and we did come back down to the lower Bollinger Band in this very critical support zone right around 370 to 371. And as long as we're above this critical support, there's no reason to get bearish, meaning that we could still bounce from this support zone and still push to a brand new all-time high. But if we break down below 370, we're likely coming down towards the 50 EMA right around 365 and this breakout right around 360. Now below 370, if we get a little bit of an undercut of that support, also pay attention to 367. But if we do start closing below 370, that is going to be an indication to get risk off in the Dow Jones. On the Russell 2000 IWM ETF, we were down 0.71% today, and I told you in the small caps, as long as we can hold above this 50 EMA of risk level, which is 189, that we could still likely push higher towards the gap for that 198. And to add to that, I'm going to switch this over to the weekly chart, and you can see that we're also sitting right on top of the weekly 200 period moving average, which is right around 188. So 188 to 189 is going to be a very critical support for the small caps. And for that reason, that makes it a very low risk bullish entry anywhere between the high 180s. Now this price target would still be a bounce to a lower high because we're only looking for the gap fill above 198. And then if we push through 198, then we'll be looking for 203 and 207. If we start breaking down below the high 180s, then we're likely pushing back down towards 180 to 181 to test the daily 200 period moving average. On the ARKK ETF, we were down 1.8% as we continue that bearish look ever since we broke down below 48. We are likely coming down towards 45 and 44, or that 200 daily moving average just below 43. To get bullish, we need to break back above 48 and then break this resistance at 50 to 51, and only then can we start to say this could be a higher low within a bull trend. On the VIX, we were up 7% today, and the VIX is spiking towards that resistance right around 15. And I told you during a pullback within a bull trend, it's perfectly normal for the VIX to spike to these levels. It's only if the VIX starts getting out above 18 and 20 that we're going to see high volume panic selling, as people are becoming more fearful and starting to panic sell, but we're not going to get panic selling with the VIX down here right around 15. So again, it's something to be aware of. It's not something to be scared of. If the VIX does start to spike and we lose those critical support levels in the indices, then we simply just get more risk off. On Bitcoin, we're currently down 1%, and Bitcoin could be putting in a lower high rejection below 43,000. And if we do break down below this support at 42,000, I do think there's a good chance we're going to my price target at 38,000. So manage your risk at these support levels at 42,000 and 40,500, and keep in mind it's very likely we're going lower while we're trading below 44,500. That means even if we go to 44,500, it's still possible that we reject and go down towards my price target. So don't get faked out by weak bounces. We need to see a powerful break through that resistance if we're going to get bullish, and then we could start pushing higher towards 50,000 on the breakout above these resistance levels. Those resistance levels will be 44,500 and 47,500. On Nvidia stock, we were down 0.58% today, and Nvidia simply pulled back from the price target at 563 to the previous price target right around 551, and that's exactly where it found support. So this is why I continue to warn you not to short this stock, because even if it pulls back, it's more than likely just going to the old price targets before it finds support or going to go sideways. I still think this stock is trying to get to 600 before earnings, and there's plenty of time to go before earnings because it's about a month out. So again, I will constantly remind you, do not short this stock. If you're a bear looking to short a stock, there's plenty of other weak stocks to short, and this is a very powerful bullish freight train. So right now, it's staying bullish above 550, and if it breaks below 550, it's still likely going to find support between 530 and 540. On Tesla stock, we were down 1.98% today, and it still looks like Tesla has been able to hold this support right around 214. And the longer we can hold 214, the more likely we're going to bounce from there and go close the gaps above at 225 and 231. It is only if we start to close below 214 that we're getting another risk off signal, but just below 214, I have another very strong support right around 207 to 208. Now, if we break 207, then we come all the way back down to the October low from 2023, which is going to bring us back down to 197. I don't necessarily think we're going there, but we'll let the price action do all the talking. And keep in mind, even if we bounce, it could still be a dead cat bounce before we do put in that lower low at a later date. So pay attention to this critical level at 214, and that's going to tell us whether we can push higher towards the gap fills, or if we're going to break down, we're going to see it in the price action at that level. On Apple stock, we were down 0.52% today, and Apple is still holding this critical support at the rising 200 daily moving average, and I still think it's possible to be bullish on Apple above 180. Below 180, we're likely coming back down towards 177 and then 174, but above 180, it's likely we're heading higher to close the gaps at 185 and just below 192. So if you want to buy the dip on Apple, this is the time to do it right here, right around 180. And if we break below it, just manage your risk accordingly. So jumping back over to the S&P 500, we're still going to say this is a bull trend while we're above 467, but I did talk about the bearish and the bullish scenarios, so you should be well prepared for either of them. Now all you need to do is go make a trade plan around following the price action and managing risk at these critical levels. This is how you become a disciplined and profitable trader. You don't just guess and hope the market moves in the direction you want it to. You prepare for either of the directions, and then you hop on the train in the direction the market is moving, and you try to maximize your profits around critical risk levels. If you think somebody knows exactly where the market's going and you just got to go find that person to tell you, then you're never going to be a profitable trader, because one, you're just depending on somebody else to tell you what to do, and two, you're expecting one single person to know where the market's going to go, and nobody truly knows where the market's going to go. That's why you're much better off following the price action on the chart. So get in the habit of following your chart and marking up the critical levels and having a trade plan around what the price is doing at those levels. As I've said before, we are going to absolutely crush the market this year in 2024, and I do expect it to be a great trading year. So if you want to come crush the market with us, you can come join us at Bank Trade Alerts. You'll get all of your buy and sell alerts directly via email and text message, and we only trade two ETFs, which is the TQQQ and the SQQQ. You can find out how to join Bank by clicking on the link in the description of this video. If you want access to my intraday updates and technical analysis, then you can come join the Stock Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.